In our next panel discussion, we will look at how the shift to clean electric transport has accelerated net zero power generation and how Singapore is faring in its journey towards a net zero energy system. In this panel titled Climate Change, Accelerating the Clean Energy Transition, we have Mr. Philip Lim, Director and Principal Consultant at RHD Green, to moderate the session. Philip brings over 33 years of experience in general management, M&As, corporate business development, strategy, and sustainability. He has worked for global MNCs in assignments across the USA, Europe, China, and Asia. He serves as an advisor to CEOs on sustainable ecosystem development, impact investing, and strategic growth projects. Philip's significant roles include a startup founder for Chevron's digital venture in China, chairman of Chevron Hong Kong Limited, and Asia Pacific Regional Director at Johnson & Johnson. Joining Philip today are Thomas McMahon, CEO and co-founder of Air Carbon Exchange, and Alok Jain, CEO and Managing Director of Transconsult. Gentlemen, the floor is yours.
Hello, good morning everyone. Thanks for joining us today for this very interesting topic that we'll be discussing with two expert panel members, Tom McMahon and Alok Jain. Thank you again for the time and for the efforts, Thomas and Alok, and welcome.
Thank you.
Thank you, Philip.
So, before we start, let me tee up some slides to introduce the topic. In terms of the transition to net zero emissions in the transportation sector, there are many implications, as we know, for the players and the stakeholders within the ecosystem. What is significant is that the net zero targets have now been done by a lot of the companies, especially the mobility and the transportation-related industries, which are the engine of growth for the global economy. They enable a lot of trade every year, trillions of dollars, and I think the shift in terms of the impact will have a lot of opportunities as well as risks for the mobility sector around the world. Transportation is among the most significant of sources of greenhouse effect, and they account for about 20% of the sector and of the total emissions. In 2020, the global transportation industry was responsible for about 7.3 billion metric tons of carbon dioxide emissions. Across the mobility sector, by far the biggest GHG producer has been road transportation. Tailpipe, as you can see from the chart, tailpipe emissions from cars, trucks, and other vehicles make up 75% of all emissions from the transportation activity. I think this is the right slide. Compare with 13% from aviation, 11% from maritime transport, and 1% from rail transport. However, the good news is that with climate technologies such as batteries, fuel cells, and biofuels, vehicles could now emit little or no GHGs. However, decarbonizing mobility or transportation will involve major changes, including a shift in the mix of vehicles being manufactured and an increase in upfront capital costs for consumers and organizations as they switch to electric vehicles and other low transportation alternatives. Because of these changes, companies throughout the mobility system, including OEMs and suppliers, plus manufacturers, and operators of infrastructure, will have opportunities to tap into the growing demand for vehicles that produce zero or minimal GHGs. Within the auto industry, a move towards a net zero economy and a new future for mobility is well underway. Manufacturers are accelerating the development of electric, connected, autonomous, and shared mobility. The industry has also attracted approximately $400 billion in investments over the past decade, and around $100 billion since the beginning of 2020. At the same time, governments and cities have introduced regulations and incentives to support the decarbonization of road transport. The European Commission, for example, has proposed a target to cut average carbon dioxide emissions from new cars by 55% no later than 2030. And the federal government of the US has called for zero emissions vehicles to make up more than half of all vehicles, all passengers, car and light truck sales by 2030 as well. In Southeast Asia, as you can see from this slide here, Singapore is leading the adoption of EVs, but other countries which have a much larger fleet are still very low in the adoption. They are less than 1%. For Singapore, the aim is to phase out all ICE vehicles and have the entire road transportation run on cleaner energy by 2040. Under the Singapore Green Plan 2030, a comprehensive EV roadmap was drawn to accelerate the adoption of EV on the roads for both private and public sectors. Taking the lead was the public transportation sector, where the Land Transportation Authority has committed to having 100% cleaner energy fleet by 2040, purchasing only cleaner energy buses moving forward. In the area of air transportation, the Civil Aviation Authority of Singapore, Singapore Airlines and Temasek will launch the sale of sustainable aviation fuels SAF credits by July 2022. The sale of SAF credits is part of a CAS SIA Temasek pilot announced earlier in November 2021 to advance the use of SAF in Singapore. And a total of 1,000 SAF credits will be available for sale from July. These are generated from 1,000 tons of neat SAF, which are blended, delivered, and uplifted from Singapore Changi Airport, and are expected to cut carbon dioxide emissions by 2,500 tons. For every credit purchase, will help to reduce 2.5 tons of carbon dioxide emissions. The SAF credits will be registered within the Roundtable of Sustainable Biomaterials Book and Claim System to ensure that the SAF credit transactions are conducted in a trusted and transparent manner with no double counting of credits. For the maritime industry, Singapore has the Maritime Singapore Decarbonization Blueprint, working towards 2050, which charts ambitious and concrete long-term strategies to build a sustainable maritime Singapore. Developed by MPA in consultation with industry partners, the blueprint will contribute to Singapore's commitment under the UN 2030 Sustainable Development Agenda, Paris Agreement, and the initial IMO strategy. The blueprint outlines 7 focus areas which MPA will focus on to support the decarbonization of the maritime industry. Port terminals, the domestic harborcraft, future maritime fuels, bunkering standards and infrastructure, Singapore Registry of Ships, efforts at IMO and other international platforms, research and talent development and talent, carbon awareness, carbon accounting and green financing. And finally, Singapore commitment and international efforts reinforced COP26 declaration on accelerating the transition to 100% zero-emission cars and vans, where international, private, and public stakeholders have signed a declaration of commitments to attain 100% of all vehicle sales being zero emissions by 2040 or earlier. The declaration, which was led by the UK COP presidency and the Route Zero partners, marks both a hopeful inflection point for the automotive and mobility industry with its signatories, and it speaks of the urgency in drastically reducing carbon emissions produced by this sector. While the declaration of many other national or corporate initiatives are certainly a move in the right direction, the world will still have to wait and see whether the necessary change will actually transpire as there is. So often there's always a formidable gap between talk and action, and we are undoubtedly aware of the challenges in the global goal of net zero emissions in transport. Against this evolving regulatory backdrop and the COP26 commitments, consumer attitudes are also changing very fast. One data point is the adoption of EVs, which has accelerated since 2020, despite the impact of the COVID-19 pandemic. Okay, so with these short introductions, let me now turn to the 2 panel members. I'd like to start with Alok and to provide his comments, especially the three topics that we have been talking about. Firstly, whether the targets that have been set are realistic and whether we have the ability to achieve it. Second, how are industry preparing to make that shift, especially with the distractions going on with so many other things, economic crisis and so forth. And finally, I mean, in terms of what he sees as the changes happening in the region. Thank you, Alok.
Yeah, thank you, Philip. I think those are very pertinent questions. And obviously, if you take in context of Asia, which is almost more than 50% of the world population and still growing, and the economic growth for Asia is one of the key aspects of world development, global development. Asia is driving the economic growth. And with economic growth, you have more transport, you have more freight distribution. So everything kind of starts to go up. And that is where this whole context of the carbon footprint needs to come in. And Asia had so far been one of the biggest contributors. If you see in last 20 years, Asia has grown from something like less than 30% of the world GHG contributor to now more than 50% of the world GHG contributor. So it's a huge increase. So the Asia plays a very big role in driving any of the strategies that we would like to implement to decarbonize. Now, your question about whether do we still have the time to achieve something? The answer is yes. I mean, if we do, I mean, there are a lot of modeling that is available. There are a lot of pathways people have worked on, a lot of examples available. So the answer to that is yes. I mean, we can still achieve net zero by 2050 or so, but we need to move now. The time, every day that goes by, we are losing precious time. And obviously, it becomes harder and harder to catch up. So in that sense, it's working. Number two, are we setting a right kind of targets? The answer is yes. Targets are being set and they are absolutely necessary for us to move in a direction. Otherwise, we would be completely directionless. Are we doing enough? Answer is no, we are not doing enough. We are far behind the curve, and the curve and the reason we are behind the curve is not because of technology. I think technology solutions are available. We need to implement them. It is more of the institutional mechanisms are the area where we are lacking severely. And you go across all the countries, we are missing the coherence, consistency of approach, consistency of policy, and of course there is an over politicization of vested agenda often that comes into the play, which is prohibiting us to move in the right direction. So yes, we have not moved the needle in the right direction yet. There is a lot need to be done. And I was just listening to the session just before ours, and they were talking a lot about education. And I think education is one area where we need to grow up. There's a lot of citizen action that is necessary to achieve what we want to achieve. 60% of the mobility in Asia is actually in the informal sector, and informal sector where people, their family run businesses, people own one vehicle, two vehicles, and then they run, they basically, it's their livelihood. And I always, when I talk to funding agencies and banks, it is today easier to take out a $3 billion loan than to get a $3 million loan. So to decarbonize this informal sector, which is 60% of the transport in Asia, is a real challenge. And they don't have the money, they don't have the knowledge, they don't have the education. So I think this is really one of those areas where we need to focus. Big companies like trains and buses would do, and there's a lot of green bonds are available. Those markets are getting matured. There's a lot more money flow. Singapore is developing into a center for generating green bonds and money to finance green infrastructure. But that is not really addressing this problem, which is very granular, very disaggregated within the Asian segment. So there's a lot need to be done in that area. Bigger industry like marine industry and aviation industry, obviously these are big organized sectors. and they are mostly policy driven. So, ICAO and IMO, they are driving those changes. They're not fast enough. There is a bit of resistance from the industry because of the old vehicles, old rolling stock that they have, and obviously they would like to, from a financial perspective, they would like to maximize the sweating the assets that they already have. And obviously the COVID crisis for last 3 years, and then what is happening in Europe at the moment with Russia and Ukraine crisis, these are not really helping many of the pathways. We were trying to make a lot of gain on the fossil fuel front, which has kind of gone upended by this recent conflict there. And as you can see, many countries are going back to more production of coal, going back to some of or reneging on some of the decarbonization plans that they had. So the challenge we have is a multifold, but the biggest gap that I see today is really at the institutional level, which if we don't address it, I think the rest of the things would fall apart. I think there's a lot more resting on the technology, and I am very happy to see that front is very robust and it's moving. The solutions are coming on a daily basis. Philip, you talked about electric vehicles. Electric vehicles are there. Fuel cell trials are happening all over the world, at least on the land transportation sector or urban transportation sector. And there are good signs that these will start becoming viable. But as I said, we need to reform. We need a very big reform. We are currently trying to swat a fly, but what we don't realize is that we have a monster ahead to kill. So with that, I would leave it back to you, Philip.
Thank you, Alok. I think those are very pertinent comments, and you were spot on in terms of the need for everybody, all hands deck, and for institutional framework to be put together. Now turning back to Tom, here in the studio. Yep. Tom, you have been seeing a lot of things happening here in this part of the world for the last couple of years. You're widely traveled as well. What do you see as the challenges that we face in decarbonizing the transport sector, as well as how can your company, Air Carbon, in particular, help with?
Yeah, thanks very much. I think actually Air Carbon in and of its original name was actually to face the aviation industry. Our first look was at what ultimately became the ICAO framework for the CORSIA compliance. And we felt that Singapore, where we were incubated and we were born, Air Carbon was first started and incorporated. Changi Airport was really the beautiful, I call it a petri dish to decide, because every flight in out of Changi would be international and could be judged accordingly. What we found early on was really an industry that was ill prepared to deal with it. Clearly, that was 2018-19, and there were still challenges, and they were in a reporting period, and it was a formative time. And different airlines were really, they were at the apex. I mean, they had the capacity numbers were staggering for 2019, and we know the world changed in 2020. Which, so now coming out of that, what we've seen is we've recentered our interest in a broader stroke of carbon and multiple project types and the industry. In the 24 months of COVID, I think the world became extremely aware of its own environment. And nature-based solutions became, and still are really, at the forefront of people's logic of where they would like to invest or contribute or use as an offset. So we moved away from aviation, but at the same time, what we found was the shipping industry, which has not had the same driver or mandate as ICAO had given to the aviation industry. IMO did it in terms of fuel or potential equipment efficiencies. But we're seeing the fleet owners and the fleet managers, the investors, the financial industry going, the position of global shipping has become so significantly more of an economic impact coming out of COVID. The costs of shipping are quite dramatic. The cost of fuel of shipping is very dramatic with the Ukraine event. But at the same time, a willingness to decarbonize it. So we're seeing market adoption, I guess, is to make it short and sweet. And the ride-hailing industry has become very proactive in terms of adopting offsetting or voluntary markets to begin their journey of decarbonization. Fleet ownership, clearly we will see it. I mean, we live on an island here in Singapore, and we've got a lot of water between a lot of the major nations of Asia, and each one has got to deal with their own transportation issues as efficiently or inefficiently as they can. But I think the willingness is there, no doubt, but I think it'll be a much longer transition than we think it is. I think even the ambitions of Singapore to say by 2040 it'll be an electric vehicle-based state. There's a high cost of transportation embedded in that, and the government's very incentivized to keep those costs high. So how do you get through that transition, just in terms of Singapore,
Right.
but at the same time for rural economies to do the same thing? So air carbon really is a marketplace to start to try to price that cost of transition. Really what we want to do is see a transparent price around carbon, supporting those efforts of decarbonization, supporting the project developers in the voluntary carbon space to incubate projects that are relevant to that transition point where we are, this energy transition point for the next 10 to 20 years. Blending those two willingnesses together is quite challenging at times. We have a lot of wonderful policy that's being pushed around or made public, or a willingness to adopt change. Actionability is much more difficult. Taking a policy of decarbonization or mitigation in the transportation industry and driving it down to the bottom, it has a real cost. And the green bond market is not the only thing that's going to satisfy that. We take for granted today, and again for transportation, we take for granted today, everybody looks at the price of oil every day if you're in the transportation industry, whether you're sourcing jet fuel or diesel, or fuel for boats. Carbon is going to take that place. The price of carbon is going to become as common as it is to look at the price of gold, the currency where you live, and what's the cost of real estate in your neighborhood, and the price of fuel, and the price of power. Carbon will be in that library of everyday look-see. So you need a real price for that. And we're just part of that. We're just part of that journey as an exchange. But I think at the same time, the industry's transition to understand what the implied cost in that journey is going to be we're in a sort of a bit of a spin cycle right now. Yeah.
Right.
Okay.
Yeah. Thanks, Tom. I think the comments are very valid because with all the things that air carbon is doing, you still need an ecosystem.
You do.
And how do you think that you can marshal up or mobilize resources from within the ecosystem to make it work?
Again, if we go back 2 years ago, I think two messages were coming out, maybe 3 years ago, maybe just pre-COVID. You had the Greta Thunberg effect. You had a groundswell effect of young people around the world, and it was very important. And then COVID came, and then you had basically a self-awareness of environmental compliance, and at the same time, we had a number of the task forces came up, which was very important too. And you blended all that together, two things: quality and verifiability of the projects and the underpinnings of what's going to drive this transition state, but the cost of carbon. And a willingness early on to say the price of environmental compliance should be more, a willingness to say that the price should go higher. So now you've got a market price that's forming around people are trying to figure out what the real cost of this transition is and do it at the most efficient way they can, but at the same time policy is driving it towards higher costs. So you've got a bit of a push-pull. And we're in the middle of that now. I think really what's really interesting is the Ukraine effect now that we've had. We had a lot of momentum coming out of COP26 from Glasgow, and it was very good momentum. And there was a greater willingness to really embed the cost of carbon, and I call it basically carbon inflation with intent. But now that seems to have shifted a bit. I think the willingness with the real cost of energy is quite dramatic. And I think the concept of sustainability has slipped off a little bit. in terms of how people are going to price this or accept the real cost while we go through this next phase of whatever the post-Ukraine phase is. We may get back on track more quickly than we think we are. But I think the sustainability is still a great message, and there's still a lot of policy being driven, but the real cost has been set aside a bit because we've got a real world cost in the world we're still in, which is still fossil fuel based.
Thanks, Tom. Yeah, I think despite the setback, I think the climate crisis is not going to wait for us, and I think we continue to have to battle all these distractions that we are facing in order to move things forward. I want to pause here, to see whether there are questions from the floor or from the audience, which you can actually input into, the computer or the laptop or the mobile phone that you're using, and we'll try to answer them towards the end of of this session. I want to move back now to Alok to ask him about the things that he sees that are happening in Hong Kong. I mean, which is Singapore and Hong Kong are always competing to see who does better, and what are the opportunities there in terms of the transportation sector, in decarbonizing the transportation sector. Alok.
Yeah, well, I think the opportunity is huge. Hong Kong and Singapore, they present a very unique economic model to the world in the sense that, the linear thinking around the world was this fear mongering that we need to build more roads, we need to build more infrastructure, and this is really the way to go. We need to have more car ownership, automotive driven approaches. So, if you look at numbers, Asia again stands out. And I think Singapore, Hong Kong are prime examples of those. Singapore has almost 65% of the daily travel that happens on public transport. Hong Kong does more than 85% of the daily travel on public transport. And the amount of road space that we have in the cities are very, very small. Singapore is some 20% of the urban area, which is devoted to road space. Hong Kong is only about 16%. So we don't really have, as an economic model, these two cities do not even have dependency on cars, and I think that's a very big starting point. And per capita footprint, despite being very high per capita GDP, the carbon footprint is much lower than comparable cities in Europe and North America. So these cities are really setting the example of the advantages of a high density development. And obviously, then you can transition the public transport models onto electrification. So most of these two cities, Hong Kong and Singapore, they're very metro driven, which is mostly electrified. So very zero carbon, very low emission or almost no emission industries. And most of the urban mobility is by buses, which are now also being moved into electric buses. So that is also getting decarbonized. Now, obviously, both these cities don't produce so much energy by themselves, so they have a bit of a dependency. But I know that both of them are working on creating the whole energy value chain so that the dependency moves more and more towards renewables. And that can happen in case of Hong Kong, that could be farms in China, and in case of Singapore, that could be very sea-based, wind farms or wave farms or whatever. And those energy can then be tapped and brought it into the transport infrastructure. So I think there's a lot. These are, as Thomas was just mentioning earlier, Singapore is a great petri dish, and frankly, I would like to echo that point that both these cities, because of their confined sizes, they actually present a great opportunity for regulated small scale experiments, and then you can test them out and scale it up for bigger purposes. So they play a very big role. They are both rich economies. I think there's a resilience in these places for little shocks. the population, the citizens of these two cities, they are more aware, more educated, more informed, and the adoption rates are very high. So they adapt to these changes very quickly. So I think there is, and this is really where we have to go, and we need to define, there is a common perception in this industry where people think that if you do green, it is going to cost you more, it is going to not be as efficient, etc., etc. So it's being seen as something which is not of the same standard as what we are doing, the BAU, the business as usual today. And I think that notion has to change. And you see what China has done with electric vehicles. 98% of the global electric bus fleet today is actually manufactured in China. China is adding 9,500 buses every 5 weeks in the country. And 9,500 is in London. So they're adding a London worth of buses every 5 weeks in China. I mean, these are huge numbers, and they have already converted almost 60% of their urban fleet into electric buses. So, and the whole, and all the numbers now, if you see the analysis that is coming out of World Bank and WRI or ICCT, and you can see that these electric buses now have reached a point where they are, in terms of a total cost of ownership level, they are much cheaper. They are 10 to 20% cheaper than a comparable diesel bus. So not only that they're costing, they're creating a new economic value. The whole industry is centered around this new economic model, which is then proving to the world that you can actually kickstart an economy using these methods. So, and that is why now rest of the world, after looking at what has happened in China, they are moving towards decarbonization of their fleets, because they now realize that it's not actually costing more, it is going to cost less in terms of the entire life cycle basis. And I think this is really the message that we need to create, that we need to create a completely new industry which is focused towards environment. We cannot have a linear progression of what we are doing. We need a very lateral, disruptive kind of approach to the whole solution, so that we can address, because while we are doing all these environmental issues, we can't forget that in places like Asia, I mean, Singapore, Hong Kong, Bahrain, rest of the Asia requires a lot of social progress, economic progress, and those need to come hand in hand with this transition, the environmental transition that we are trying to do. So there's a lot on the plate, and hence we require a completely new type of governance models to make this transition.
Thanks, Alok. Speaking about the, Singapore again and Hong Kong, I mean, Tom, I mean, what has been your observation in terms of how both countries can collaborate, and how Singapore can work, with its ASEAN partners, rather than just focusing on some of the things it's doing?
Yeah, I think it was actually a very interesting news article this morning in the Business Times, and it spoke about the first green energy power agreement that will go basically hydro green energy from Cambodia, passing through Thailand, through Malaysia, into Singapore. Now, I did a lot of work early on in my career when initially when we're talking about electric transition. Basically, you had a massive transition in the 70s and early 80s around fuels, right? The California Clean Air Act, the United States sort of set the tone for that. And then you had the power markets deregulated in the early 90s, and the global power markets deregulated. Asia has not come up as rapidly as other, because you've got country-level grids, and they're strategic, and under War Powers Act, they're protected, and they're slowly being opened up. But green energy is a driver that's got to be transnational, and I was very happy to see that announcement. That's a groundbreaking announcement. I know there's been discussions about connecting Singapore to Australia or to Indonesia, by cables, right? Physical. But here you've got existing grid architectures that just created interconnects, is what they're called, interconnects. But you have to have what's called third-party access, TPA agreements in place to allow that to happen. That's significant. And I think the significance of it is about cooperation at the environmental level, right, and green energy levels. So if we can start to replicate that, I think there's a great logic, and equally so for Hong Kong. I mean, Hong Kong is a peninsula, but it sits in its positioning, at the mouth of the Pearl River Delta and the greater Delta region, and its impact as a financial center and a regulatory center. It's always been, it's been a leader, right? I love the competitive instincts between Singapore and Hong Kong and the back and forth, and those are drivers, right? No one's sitting there going, I'm the best, he's the best, and they're going, they always do. One-upmanship breeds connectivity and creativity, and I think that's really where we are today. I know Hong Kong has had its challenges with the greater China region, but as a trade center and as a financial center, it'll always have its a logic, and its exchanges are very strategic from financialization. So I think they're going to move a bit in lockstep, but definitely be competitive going forward. Yeah.
Thanks, Tom, for those insightful observations. Now coming back to Alok, I know Alok, in your previous jobs and assignments, you worked for the MTR Corporation in Hong Kong as well as the Kowloon Motor Bus Company, and and now of course you also sit on the Council for Decarbonizing Transportation in Asia. Those are very important roles. I mean, what do you see as the gaps between intent of a lot of countries wanting to go towards net zero, especially in the next few, next decade or so, and in terms of also the gaps between intent and execution? Yeah.
Yeah, so I mean, as I said earlier, institutional framework is one of the big gaps that we are seeing, and the governance models associated with that. And then, of course, the second big gap that we have is the financing, the money part. And a lot of development agencies, they are coming around, they are funding a lot of infrastructure. There's a lot more new metro construction happening. You go to India and you see almost every secondary city is building a metro line. Manila is building a metro line. Indonesia, Jakarta is building metro lines. So there are a lot of metros being constructed around this region at the moment. And I sometimes say that there was never in the history of the world a time when so many countries were building so much of metro infrastructure. So this is what is happening at the moment, and there's a severe shortage of skill set, the manpower, the equipment, the contractors, all those. So it's a booming industry. But having said that, so that's one side of it, which is good, which is really what is needed in very dense cities of Asia, the mega cities. In Europe, when I go, a million people city is considered a big city, whereas when you come to Asia, a million people city, I don't think people even look at it on the map. These are 10 million people, 20 million, 30, 25 million people cities. So these are really big mega cities, and they need to move masses of people, and masses of people can only be moved not by a road infrastructure-based system, but you need a railway-based infrastructure. And good part about railway-based infrastructure that it is mostly electrified, and hence it is zero emission. So there is a natural synergy that we see on that side. But having said that, as I said earlier, this is really good part. But then the bad part is that there's a lot of unorganized sector in Asia. People who deliver your food, people who deliver your parcels. These are small van operators, goods vehicle operators. I mean, if you look at Singapore bus industry, outside of the three main players who are running the franchise bus operation, if you go to non-franchise buses, which are running your corporate services, employee services, school buses, these are very small operators. They have 50 buses, 20 buses, 30 buses, and they don't really have the muscle to make that transition. They don't have the financial depth to make the transition. They need support. They need government support. They need governance support. They need financing to make that transition. And obviously, those are the areas which require a lot more attention. And I'm talking about Singapore, which is already a much advanced in terms of governance models. You go back to countries countries like India, Indonesia, Thailand, these models are they also have their political issues in place, and navigating through that channel to put these framework in place is a considerable challenge. And I think this is really an area where we, as a council of decarbonizing transport, one of the areas we work on is work at the policy level with the government leaders, and to make sure that they set targets, they put some action agenda. There's a civic participation, civil society is participating in the process, and you have more. So there's a global narrative, global objective, but you need very localized solutions because the cultural, another thing is cultural aspects. In Asia, you go to any country, even though these are small countries, they have their own culture and they have very strong ties with that culture. So you can't really ignore that. So whatever solutions we come up with, that has to be conducive to these cultural nuances of various countries within Asia. So it's a very flavored, local flavor is really something that is needed in that solution making. And as I said, technical solutions are all there. We have a lot of startups, small companies, which are coming up with great ideas. Asia is also giving you a lot of unicorns at the moment, a lot of mobility solutions, and many of them have actually pledged to transition to net zero or zero carbon kind of, at a timeline. So targets are being set, but I think actions are at the moment missing, and those are something that we need to start putting together.
Hello, Tom. I think in your own experience as an entrepreneur, raising funds and money, I think is one of the big things. I mean, do you see that happening in terms of climate tech or carbon tech, and what's your view in terms of what more is needed?
Yeah, well, I don't think there's any lack of funds available. I think what there's really a lack of that it's being strategically deployed. I think what I saw early on, if you go back to 2016, 17, a number of the equities markets saw an opportunity to step into a new market space, ESG. It was fairly undefined. Listed companies around the world were put under pressure to file their ESG frameworks, and opportunistically, the index provider said, "Ooh, let's come up with a new product. Let's call it the ESG index." And basically, they created a very light touch, and they looked at the DAX 600 was the first one to do it, and they looked at 600 their companies, and they came up with a framework of who was greener, and they eliminated, I think it was 63 of the dirtiest companies, and they wound up with 537 companies, and they created the new ESG index, and it had 3 layers. And it really was, it's what exchanges do. They develop new product, and not everyone gets sticky, and not everyone even gets launched. And they launched these, and within 6 weeks, they had a marketplace that nobody had anticipated. There was demand for ESG investments, and it was the first early days parameters. We've moved on significantly since then. I mean, that simplistic view of what was a greener company is becoming the requirements for what is sort of greenwashing, but that's an unfair statement on everybody, but really higher metrics of compliance. What constitutes greener? What constitutes your energy transition state at the corporate and manufacturing and transportation, as we're talking about? So I think that's one good thing. I think a willingness to invest at project levels, and we're in the voluntary space, so that means you've got to fund projects. And projects can be anywhere from we're saving a forest or a mangrove, or peatland restoration, to methane gas capture. The other end of it is the spectrum, and it's the end result is net zero conversation is about getting to carbon removal, right? Net zero is about not just sequestering, it's about getting it to zero. Removing is a large part of that. So what is the technology that's going to support that? And that takes significant investment. And we're seeing a willingness at that end of the spectrum. So if you're looking at a CORSIA compliant credit around a good quality forestry project today, it's around $5 a ton, $5 to $6 a ton. It was as high as $9.75 in December of last year. It was low as $1 in January of 2021. So the market moves. There's demand. The other end of the spectrum is some of the new carbon capture technologies, or DAC, the direct air capture being driven by Climeworks out of Europe. You're looking at $1,200 a ton in terms of the cost to get that technology scaled. So, and I know that they raised 660 million euros back in March of this year. So there is a willingness to invest at both ends of those spectrums. Yeah, so again, I think we've got a bit of a hiccup here with the Ukrainian war, but I think it's like a speed bump. We all know speed bumps in Singapore. You get past them. So, yeah.
Thanks, Tom. I think that's a very optimistic outlook that you have portrayed, and again, something which I think all investors and entrepreneurs out there have to work together, hand in hand, to ensure that it happens. Okay, coming back to Alok, in terms of because you work across different transportation sector, I mean, which of the sector offers the biggest opportunity in terms of trying to decarbonize, for cities like, Hong Kong, like Singapore, which are very urbanized, I mean, because I think globally the picture paints a lot on the fact that motor transport, road transportation is a key, but I think you may have different views on what Singapore and Hong Kong can do on that.
Well, road transportation is the key, and because it has the biggest footprint, that even from a technology perspective, if you look at what IPCC report says, that this is also one of the areas where the ease of implementation is the highest, because it's mostly in urban areas, and if the technology-wise it already exists. EVs are there, electric technology is there, so you can easily transition around that. But what we need to do is slightly, again, a lot of countries, and this is one problem area, is where they are looking at a vehicle-to-vehicle replacement. They think, you replace an ICE car with the EV, with the electric car, and your problem is solved. But that is not really solving the problem. I think the problem is also in the number of cars. And I think Singapore, for example, has realized that, and they have been using this restrictive approach to car ownership for a long time, using COE, in Singapore. And I think that is the kind of lesson that many Asian cities are either learning it too late or still not learning. So with the number of cars that are coming into the cities, it is creating a lot of congestion. So you may have clean cars, you may have EVs, but they are still stuck in congestion, which means you're wasting a lot of energy, which could have gone for other uses. So we need to cut down this wastage of energy, whether it's clean, whether it's coming from dirty sources, either way. And that can only happen if we change the whole mobility habits within the cities. And that's exactly what Singapore, Hong Kong kind of model has done, that we actually, it's a public transport driven, a lot of people walk, few people use cars. And I think that model is something that is, a lot of countries are looking at it, this whole transit oriented development, which is very, a TOD could be 30% less carbon footprint than a comparable population center in let's say, a European country. So you are saving a huge amount of carbon footprint just by redesigning your cities. And I think that is the kind of approach where Asia has led the way. So we don't need to start building more highways and the flyovers and road infrastructure to address the congestion. We need to go back and start look at the cause of the problem, start reducing the number of cars, going back to more active mobility, bicycles, walking, which Asia traditionally had been doing all the time, and of course, go to public transport. And I think that's, if we center around that addresses a lot of problems. One of the key challenge area, which really people are struggling at the moment, is the freight distribution, and that is where And it's because even if you, let's say, have an electric bus or, sorry, electric truck, the problem is that the moment they get out of an urban environment, the charging infrastructure doesn't exist. And hence the transition of these vehicles into decarbonized or zero emission vehicles is really tough at the moment. So hydrogen really comes and fills that space, and that is why hydrogen is being looked at quite keenly. That is going to also, hydrogen is also going to help and transform your seafaring, the water transport, marine infrastructure, because I mean, hydrogen has almost 3 times the more energy per kilogram as compared to let's say, diesel. So it really packs a punch. And only problem with hydrogen is storage and distribution. And if we can sort that out, then it is a viable fuel. So if you have a renewable energy that you are using to generate green hydrogen, and then you bring it into the whole ecosystem of distribution and you put it into transport vehicles, I mean, that's a dream job. If you can connect all the dots, then you have solved a big problem of decarbonization within the transport infrastructure. So and that is something what everybody is aspiring. China is currently doing a lot of trials. Japan, Korea, they are doing a number of hydrogen trials. In Hong Kong, we just had a hydrogen bus arrive a couple of days ago. So a lot of those trials will happen, and looking at the pace, how EVs got traction, I think in 5 years' time, we should be achieving some level of traction on hydrogen, where we would see a viable application into freight and marine sector of hydrogen.
Yeah, that's a very interesting insight. I see Tom nodding his head on the. I guess hydrogen's role in the, in the energy transition as well as transportation field. I mean, your views on that?
I'm a firm believer in it, but the key point was what Alec mentioned. It's infrastructure. I think it's a very unrealistic viewpoint of how quickly hydrogen can scale in any way, shape, or form. The aspirations that it would sit or do the transition alongside of the nat gas industry or LNG industry is a bit of a false flag, because literally the infrastructure can't support it, as it's too fragile. I mean, it gets down to even just distribution in Europe. You can distribute gas downstream in plastic pipes. You cannot distribute hydrogen. It's just under too much pressure. So even just that simple logic of it. But the beauty of it is, especially in the concentrated energy intense regions like say Middle East, the ability to take that same oil out of the ground and apply green, especially solar or wind, to apply to that manufacturing part of it, you've suddenly made a massive change in what's underpinning this energy transition state. So hydrogen would fit well in it, but the challenge is the infrastructure. And very similarly to, you spoke earlier on about sustainable aviation fuel, and again, the announcement was great. So it's Temasek SIA, and they're going to do 1,000 credits. We're talking about just aviation alone for sustainable. In 2019, it would have needed 140 million tons of credits, and they're talking about 1,000 tons. So again, policy versus scalability is very disconnected. And again, the announcements are great. The intent is really good, but we've really got to get a reality check on where we're going to be. So hydrogen is really, it is a fuel of the future. There's no doubt. But it's a fuel of the future. It's not going to be here next year. So I think we've got to make sure we keep that very focused on what the reality is and what the demand is. Right. Demand is definitely there, though.
Yeah, very good. I think that's a good reminder that sometimes patient capital is needed, and sometimes we need to persevere in terms of getting to our goals.
Yeah. So investment is really the key, and pricing. The price of it is really what's going to drive the markets going forward. The price of being able to invest in those new technologies, and that's relevant to the whole, environmental transition state. Yeah.
Yeah. Unfortunately, time is running out, so we have one last question.
Can I ask a question, Philip, to Tom?
Yeah.
Sure.
So, Tom, I mean, this carbon market is something that has been, presented as one of the solutions that can happen and that can solve a lot of issues. And indeed, it's a great economic tool which would address a lot of issues. But how do you see that happening in Asia? I mean, we have been, I mean, this is an area of interest for us too. Even China is taking, I would say, very cautious steps in developing the trading market. They are only addressing the power sector at the moment.
Yeah.
How and rest of the Asian countries' economies, they don't even have a mature carbon, accounting system. They don't have the reporting system, monitoring system. Forget about credit. I mean, credit comes much later. But even those infrastructure and systems are not in place. So how can that develop, and how long you think that is going to take before Asia comes, in big time into the carbon market?
Actually, I think it's here now, believe it or not. I mean, including, I will pat the air carbon on its shoulder. We anticipated a lot of these debates about double counting, double spend, double retirements. The beauty of the new exchange technologies that we employed are really important in that. Policy is catching up with reality. A lot of the voluntary market, the voluntary market had two phases. It had its first phase, and then it had its dark period, and now it's come into the light. And the first phase was the UN Kyoto Protocols, 2003, 2005, and they survived into 2012 when Kyoto 1 expired. There was no Kyoto 2. Several countries went on their own way. California went to California. Europe kept the EU ATS in a modified version. Australia, New Zealand went off in their own way. Korea kept theirs. Japan in a smaller, and the rest of the world really didn't do anything. And then you had the dark period. But the dark period even incubated a lot of very, very high quality carbon projects around the world. And it was private funding that kept it alive. The concept of quality and verifiability was supported really well and continues to be supported well by the major registries, the gold standards of the world, the VERAs of the world. These are NGOs. These are outgrowths of the original UN protocols. And they continue to enhance their principles today. Asia in general, for the most part, the methodologies in the voluntary projects that are very well embedded all the way across Southeast Asia, from Thailand through Vietnam and Cambodia into Indonesia and on down into Australia and the other surrounding regions. The methodologies are robust. There's demand for the quality of the projects that have been supported. And this has all been done basically fundamentally private sector to support that. We saw this transition into compliance first around the CORSIA and ICAO aviation regulations. And that would be voluntary markets driven, right? That would be the mitigant, the offsets that aviation industry could use in their own transition state through 2050. We've seen now a level of scrutiny because that's now been risen into the light. It's no longer in private sector. It's now government monies potentially can face these methodologies, right? They're national assets now, especially in the case of Indonesia. When they came back from COP26, they suddenly realized it wasn't just about their minerals and mining industry or their coal industry or their lumber industry. They had a voluntary market around projects that were existing or potentially could exist that would be substantially account for their own national determined reporting, honoring the Paris Accords. But now it's a national asset. These are high quality carbon projects, whether it's peatland restorations or mangrove restorations or transitioning from forestry to forest management. Now it's a national asset. So you've changed the incentivization and the transition from private enterprise to government led initiatives that have determined that we've got an asset. And countries are either long or short carbon today. The luxury of Asia is that it actually can balance both. The emissions trading scheme of China is quite interesting. It's country level. And they did a pilot project, and now they moved into their new but it's uniquely China. It's not interconnected globally, where the voluntary markets that have evolved, air carbon as one example, voluntary markets are borderless. They're not built in silos, and they have interoperability. So a Singapore corporation could have an offset from an Indonesian company, and it's recognizable, right? And it's a mitigant. An entity can invest in a project in the Philippines to support methane gas capture around the agro industry, and that becomes an offset for a corporation in Tokyo potentially. That's the voluntary market, and I think that's really going to be the economic driver and incubator for the industry going forward.
Very interesting. Thank you.
Yeah. Thanks, Tom, for that lesson 101 on the carbon markets.
It's great to begin at a foundation level. It's okay. That's how you build markets.
Yeah, I think we could go on for another hour because there's so many things we can talk about. But we have another panel coming up, and we have to wrap up. So if you were to give advice to whether your clients or to the policymakers, what would you say?
Well, first thing is always starting with yourself. And so we as an organization, we have taken a position that we will not take up any work, any project that would damage the environment, that would not be in the direction of creating more sustainability, reducing the carbon footprint, decarbonization, etc. So we have, as a company, we have taken a pledge, and we just, we initially had a lot of discussion whether that is commercially suicidal, or if you like, but we have now found out that this is not really, it doesn't really create much of a trouble. Once you organize yourself and you define yourself clearly, people then completely understand, and that creates more value around it. So that is a beginning point. And I think what we are now trying to do is scale this message up. We want to talk about this, and we want to get more and more organizations come forward, make voluntary pledges to live up to these expectations. And I think it's that collective view, collective framework that if we can create, that is what is going to then drive the market. Obviously, as I said, financing for the smaller sector, even the building skill sets, giving them the right kind of tools, those things are also extremely important, especially in a fragmented and disaggregated market like Asia's, because that is where the majority of the carbon footprint is coming from, and we need to address it. So the organized market is easier to address. They can also come and do the carbon trading and whatnot, but it's the unorganized sector is where the bigger challenges lie. And I think that is an area where we need a lot more campaigns, a lot of civic education, etc.
Thanks, Alok. Those are very wise words. Tom, one takeaway for the audience before we leave and wrap it up.
I think, coming out of COVID and the world's reopening, one thing, the reality is, I think environmental awareness is realistic. I think more importantly, the willingness today, as opposed to a decade ago, when Kyoto did not get renewed, is significantly different. It's not a question of, is this going to be on the marketing or the warm and fuzzy sides of multinational corporates? It's not. It's now in the accounting and the treasury and compliance side of companies. Societally, people are willing to, I think, take on that cost today. And I think that's really the change. So carbon as a cost is going to be embedded across our entire life, whether it's from the car we drive or the bus we take in the morning, or the house we live in, or the clothes we wear, the food we eat. There's a real cost of carbon. So I think, we've got to prepare for that. But at the same time, it's going to drive a technological revolution, similar to what was driven the first. I'll tell you, solar and wind that we know today, that we take for granted of green energy, was driven off of the back of the original UN and Kyoto protocols. The incentivization for that shift. I mean, a solar panel cost anywhere from $1,000 to $1,400 20 years ago, and it was driven down to sub-$100. And the incentivization was the carbon credits, or the additionality of costing support allowed for that transition. We're going to do that next level, I think, in environmental compliance. So be prepared for it. It will be a real cost, but it'll be an investment opportunity also, and be new skills and new technologies developed as a result. Yeah.
Thanks, Tom. I think with that, I think we will wrap up today's session. Thank you to our audience for your questions, for your attention, and I think we learned a lot today from our two speakers, Alok and Tom, and with that, thank you very much, and we'll see you again soon.
Thank you.
Thank you, Philip.